Yo, yo. Good morning, everybody. Jack Leeson with StartupTrading.com. It is 9:07 here on the 24th of January. The title of the videos. I totally screwed up that. Totally screwed up the title. It started. I don't even know what I was going to say. Targets. I was supposed to say targets based. Targets based on yesterday. I don't know why I wrote best. Must have not been paying attention. But targets based on yesterday's accumulation is what it's supposed to say. So, what is that? So, if you guys remember, yesterday morning, I went through a bunch of like different scenarios, and then I was like, wait, hold on, we're holding an extension right now. The draws I had were like a little further below us, and sometimes what you doing your analysis, there's always all Fibonacci's are potential levels of support or resistance, right? The price action around that is always what's going to matter, and each one of the levels can be valid in a sense that you get a reaction from it. Okay, you get a reaction from it. But yesterday, going to the open, I talked about this next traditional being a scenario, but there was also different sequences from that prior day. One of which being that 1040 anchor that I went over towards the end of my video yesterday. And then, if you remember, opposing that anchor was this, extension short. So we went into the prior day with an extension long at 21,871. Now that ended up being the low, and then that extension short 38 retest. We saw resistance there. We came up to the 50. This was during Trump's speech, and then we traded a full halfway back and jacked it up to targets. Now, so it was basically a ping pong match, but regardless, that support level held, and that's going to give us a fresh new upside profit target of 22,000. So that target's back up at 22,000, and we very well could be there by Monday. When you see extensions hold, if we continue the trend off an extension, it's typically very fast. Honestly, I wouldn't even be surprised if that completed today. It's another 200 points higher. If we blast through this week's highs within the first 30 minutes, who knows? Anything's on the table within 200 points. We're unchanged at this point in time. So, there was. I'll go over my analysis, then I'll answer Perry's question about the amount of trades I took to finally get in the big runner. But there was, and yesterday, my opinion in the morning was that it was going to be a two-sided market, meaning there was really to be money to be made to both sides, and validating that, it was the fact that off the open we did see participation on the short, and we did see participation along these market participants are like, yeah, we don't know which way we're going, but we're going to take high probability entries in either direction, and that's exactly what they were doing. It really wasn't until mid lunch or like during Trump's speech that the market, at least the NASDAQ, kind of really started confirming that we were going higher. So as we go into the open here today, let me just review the prior day's sequences. Now, yesterday, we had those extensions or whatever, and then starting right around Trump's speech, we had a full halfway back from the overnight session. So that traded here. It was like wick down 11.10 and then wick back up to profit targets. There was no next measured move. It was the middle of lunch, and lunch, that's why this zone is grayed out. Oftentimes this isn't very technical. This next measured move that would have held, failed, broke at 61, and then there was just a counter trend short down to targets, which then gave us the original draw. We ran that up to targets. Nice clean move here, and then the full halfway back, cocked and loaded here into the end of the day. If you draw up from here, it's front run, RTH, it traded, and then we instantly broke above the next short setup. After we broke above that short setup, we traded a long here. We went sideways for 25 minutes and then sweep into a new low, into the 50% retracement, run to targets. And then that next measured move, kind of the same thing here, into the end of the day, drawing to that first high. We were just dilly-dallying around here. And then where I finally got paid yesterday was, I knew this target was above, and I'll kind of segment into those amount of trades I was taking. Definitely, I was looking for a bigger move, and what I kept doing, as opposed to like one contract, 50 points of risk, I didn't really feel like, you don't need 50 point stop every trade, but like that's $1,000 per contract. I was piling in, and sometimes I like here I got long, and then I would add. So I was trying to just add my average because on my initial balance or on my initial stop, I didn't want to, like, if this is coming down like a hot knife like it was, I don't want to stick 4 out right there because that means I need like what, like a 12, 13 point stop. That's just too tight. I would buy a contract and then or two and then add into them and keep my stop no more than like one risk unit size. And then even as we got tighter, I was using either these 61s or like 3 or 4 point stops. And if the market went my way and then started coming back against me, I would just get out of the trade, like 2 point loss, 2 point gain. I think I tried this like 3 different times to no progress. There was a couple of trades where I felt maybe even four, or I really don't remember the amount of trades, but I was doing it way more than I previously do. Just because I thought, the volatility was tight here for a bit, and I really thought we were going to move up into these profit targets. It was just a matter of being in the trade when it happened in full size. And so, really, towards the end of the day here, I was able to capture, I think, like a 50 plus point move or around there into this profit target. And all that trade took, my final trade, it was like 10 or 15 minutes where the majority of the move came from. So it was a lot of times you have to fight. You have to fight to get that move and keep that risk tight. The most important thing, what was that if any trade I was taking, even if I was increasing my size, I was not increasing the risk I was taking on the trade. And that's hard to do, to increase your size but not increase the actual monetary risk on the trade. So if you see an opportunity, where you're long, you have a good reaction. Let's say you got long this 50% retracement, and that first 5 minutes is up, that next 5 minutes is up. You might be able to add and then just throw your stop below that low. That's a halfway back long for the day. We instantly reacted. The bias is bullish, and so that entry would have been, let's say, 26s, and up here we're at 38s. We're only 12 points above where we're currently trading, and then the low is 22s. So you're less than 20 points from adding at the end of that 10 minutes after rallying, and you would move your average up where you're still risking, instead of risking maybe 50 points initially with a wider stop, you're instantly moving that stop up, defending that position and anticipating. Now, it's not always going to work. There's going to be times where you come down, you get that second test, it takes out the low. Had you been in your original position, you would have been fine. But because you added and tightened up, you weren't fine. And that's the trade-off. Of course, with trading, everything's a trade-off. But higher risk reward ratios is going to come with a lower probability of completion. Lower risk reward ratios like 1-to-1 are going to come with a higher probability of completion. That's just the nature of the game. But yeah, so and that's just different ways to manage trades. If we're going into the end of the day, and there's that target above, and all day long, I mean literally from the open to right before 11:30 to coming out of lunch to going into the close, we were holding along. And that is why I kept trying to, especially towards the end of the day, trying to get in that long stack because I knew that target was above us. And we continued. We rallied to the bell rang. But the reason I had the confidence that might happen was there was a long off the open. It tested again after the first 30 minutes. The next setup was a long that held the target. We retested that again during lunch. The next setup was a long. After that long, halfway back long for the day, we held along. After that long, we held along. So it's like, I'm like, wow, I call it stacking, where it's just one setup after the other is pointing in the same direction. So to conclude, what we're going into during the end of the day, what I've noticed in my last trade here in the overnight session, this is one of those things where you just kind of see the bid come in. For whatever reason, this 3 o'clock low to high caught a bid right off the 6 o'clock open. And then we caught a bid here again. We caught a bid. We broke it. the European session. But as we've come back into the New York session, I'm just treating this generally as support, and this is the draw that I'm using, this traditional, and only because I saw a trade, we broke above resistance, it traded again, we made a new high, so that tells me there's buyers there. And with the way we closed yesterday, that was in a huge explosive move, and it wasn't um, a salmon run where you continue to trade higher after the close. We faded back in. This bar ends at 4 o'clock. We were seeing buyers into the bell. Like I said, buyers into the bell. So my bias going in the day is bullish. Ideally, I'd like this low to hold because I'm long from it, of course. So if it doesn't, what I would anticipate is just a check back into the 215, and that also could be a possibility at some point here today. That 215 low to high, you can see traded in the overnight session. And that was just its own separate level. But if there's two scenarios that could happen here, one, this will be defended as a traditional at 845 low, or two, because if we rally through the open, which I'm kind of anticipating, and maybe even get as high as 22,108, which I definitely think is a possibility, we will then engage the extension from 130. Okay, so if we run off the open, and that'd be a 50-point run from here, totally within the cards of realms of possibilities, the way the market moves, we're going to re-engage this extension, and that would be the ideal setup. I'm just moving my targets higher. Hopefully we can bump through these levels and start moving up towards targets. But like I said, guys, the higher time frame target is 22,000. So that's what I got for the NASDAQ. For the S&P, guys, the S&P was even more bullish yesterday. And I've talked about the structure in the S&P being different than the NASDAQ. We don't get the depth of pullbacks that we are getting in the NASDAQ. In fact, the ES held what was a Monday over, I think, no, was that the overnight session? Monday was a holiday. So Monday, that 9:45 a.m. anchor too high held here in the overnight session. And then by the time we were opening, while the NASDAQ was retesting its extension, that the ES was not coming close to those overnight lows. We were already trading longs, and this kind of also backed my whole confidence in the long thing. Halfway back long from lows, bid. Halfway back long lows, bid. Halfway back long lows. We just kept bidding these halfway back longs until finally we went to the next measured move. That was the one that took us higher. And then even before Trump started speaking, we really started moving in the ES in a way that we weren't in the NQ, taking out the prior day's high before the NASDAQ did, et cetera, and then longs all day, and eventually actually completing the profit target here into close at 61.49. Now in the overnight session, this next major move is the one I have drawn, which is basically that swing low from 215 to that end of day high. And there was a couple of different variations that, of course, came in here, and they bounced and traded. But as we come out of this, that upside target is going to be a 61.59. But there's also going to be two possibilities of extension. If we run through overnight highs and get through this negative 100, which is a 61.58, you're going to want to grab the 130 high to high, and that's going to be your setup. Now, let's just play devil's advocate. This setup may not hold. Where are we going? I would anticipate the first support to be the full halfway back long. If we don't kind of hold this variation here. So if we start cracking through overnight lows, I would really not look for anything long unless I had some type of structure build till like 61.30s. So 61.30s is going to be below that. But yeah, that's going to wrap up my morning trade plan. I'll share these levels with you guys in the room. And then we'll take it from there. My nose is getting clogged.